Okay. All right. So that was just sum up on credit. So now we want to go into investing, building your finances through investing. There are several ways to invest your money, but today we're gonna go over the stock market and a few ways that you can invest in the stock market and to have minimal risk. Okay, in order to invest. You know what I'm saying? We want you to be comfortable and invest without fear, especially when you're investing in the stock market. You don't want to have a lot of fear because you have to mentally be prepared. First, you ask yourself, what is stock? Well, stock is a company. A lot of people get stock confused as the share, but the stock is actually the company itself. So a company has all of their assets put into what's called a stock. The company becomes a public offering and they become a stock. And how you become part of this company is with shares. You are able to purchase shares of that company, and that in turns make you a part of the company. You can buy shares, so you can purchase stocks for as low as $5 to all the way up to $25,000. You can make money off your shares, and how you make money off shares of stocks is if those stocks ebb and flow. They go up, they go down. So if a stock goes up, of course you make money. Right. If a stock goes down, you can lose money, but the only way to lose that money is if you tap out of the stock. Because
while it's down.
Yeah, while it's down. Because that will determine, because a lot of things determine why a stock is down. And we'll go over that, like COVID, for instance. Right. Some stocks go down because of COVID-19. Do you tap out? That's where studying and research comes in with the stock. Mm-hmm. To know when to pull out, when to buy. Because right now, if COVID is low, you have a great company that you want to invest in, and that stock drops. You want to purchase that stock. You want that opportunity to step in and jump in on that stock.
Boeing tanked.
Yeah, you want an opportunity. When you get that first opportunity, and that's called a dip. Mm-hmm. When you see a dip in a company, a good company, you want to make sure that dip is because of what is going on within the economy and not what's going on within that company.
It's incidental.
Exactly. So you want to do your research on stocks. Stocks are all around you. You participate in the stock market every day. Mm-hmm. The stock market is broke down into 11 sectors. That's how they break it down. That's how it's broke down on the S&P, etc. The stocks are breaking down into different sectors, and that's how you know if different sectors are doing well and how to diversify your portfolio. Okay, so there are 11 stock sectors to choose from. But right now we'll just go over a couple, which are like the healthcare, technology, communication, retail, utilities. The list goes on. Stocks are around you every day. Your phone companies, your water, your utility company, the places that you shop, the clothes that you wear. Stocks are on your body. Stocks are in your cars. The entire nine. So why not invest in something that you can already, that you're already investing in?
You're funding it.
Now, if you can't, you might ask yourself, like, what if I don't know what particular company I want to invest in? I'm not sure. I have several companies, but you may know a sector that you want to participate in. That will be an exchange traded fund. An exchange traded fund is a mutual fund or an index fund. And this is just basically a company that has several stocks in it. You'll get an exchange traded fund for a couple of reasons. If you, do not know what you want to invest in. A lot of people do that because they do the research for you. And also if you cannot afford certain things, like Amazon is in ARKQ, if I'm not mistaken, or ARKK. If you can't afford Amazon, you can get ARKQ for $76 per share. And Amazon is, I want to say, about 15% of their portfolio. They're a high percentage of their portfolio. So you can do that. If you cannot afford to just outright purchase a stock, you can purchase an exchange traded fund, which is an ETF, that would allow you to take part in that company. You do have to pay a small fee. It's like a change, really, and that's just for them to manage the fund and make sure that they're putting the right businesses in it. Some examples: if you are into the airline industry, like she brought up Boeing, and you're not sure if you want to go Southwest, JetBlue, or whatever, you would go with an ETF called JETS, JETS. That is a airline ETF. It has all of the stocks in it, the airline stocks in it, and it's really affordable. It's about $23, $25, $30. And like I said, ARKQ is a technology and robotic ETF. It is a great ETF. It is growing. Actually got in low. It's about $70 now. So that's something you want to look into. And we gonna have the advanced workshops where you'll learn how to do leveraged ETFs, 2-time leverage, 3-time leverage ETFs, where you can make money on your ETFs more than just what per shares are.
I'm gonna take it. I'm taking the workshop.
Okay, now, if you are a concerned investor and you want to have long-term investing, you can do what's called bonds. Bonds are a little different than stocks.
Not bail bonds.
Not bail bonds.
Not
We ain't trying to make it.
Not clank clank.
Yeah.
No.
But bonds, you guys probably have seen them as kids coming up. If you, I don't know how old you are, but you had like blue chip bonds and the stock. You heard those coming up, and they used to be actual papers. Or the cowboys
In the Western movies.
Yeah, in the Western movies,
get them bonds. They
like,
robbing
for the bonds.
They be happier about that than the money.
Than the money, because let me tell you now, with a stock, you are
surety bonds is what it used to have on the top of it, because it was
sure money. Exactly. I'm glad she said that, because that's the reason why when you see the economy start to go bust and a lot of big time investors, you'll start seeing them pull their money out of certain stocks and you'll see them dropping into bonds. Well, what it is when you are into the stock market, you're buying shares of the company, you are purchasing part of this company. The bonds, on the flip side of it, is you are becoming the lender. You are loaning the company money. A company is trying to increase a certain amount, which Boeing just offered a bond, I want to say about 4 or 5 months ago, to increase for their like 747, 57, don't make me lie. Yeah, so they just put out a bond.
Yeah.
So you'll put out a bond. A bond is guaranteed money. It's an agreement between you and that company, and you can have it with a company and or government agencies. Bonds just don't happen with companies.
Wartime bonds. Look it up. That's a lot of old money. A lot of people that are out here are super wealthy because their parents, great grandparents bought wartime bonds, and that shit came back at 1,000%. I'm sorry, I didn't mean to cuss, but it came back at 1,000%.
Man,
what a return!
What a return. And if you have some old bonds, you'd be surprised. You probably go cash them in. On the face of it, it may say $25, but I guarantee you go, it's going to be about $50. So, and that just depends on the agreement of that bond, because when you buy a bond, you're buying the bond for the agreement, a term, a maturity date, and a percentage rate. So that percentage rate is guaranteed year over year up into that maturity rate. Meaning, like if you had, if you buy $1,000 bond and it's a 5-year maturity rate for 5%, year over year, you're probably going to earn about $650 on that bond, meaning because each year it matures a little bit, because that 5% it increases.
And that's similar to a certificate of deposit, but the return rate is much better than the interest rate is on the CD. The interest rate on the certificate of deposit is probably 1.8 to 2%. You might squeeze 2.5 from somewhere.
Exactly.
So 5% is double that. So that's why that's a better investment for your money if you have access to that.
Exactly. So consider a bond. Like if you are scared of stocks in the beginning, consider a bond. Consider looking into bonds. And if you have long-term, bonds are for the long-term investor. Stock market is a long-term call too, but bonds are for sure because it has a maturity date. Okay.
Yeah, I got it.
Okay. So consider, a secure, investment as a bond. So let's just talk about real quick. You might ask yourself, why would I invest in the stock market? Isn't it risky? Yes, everything is a risk. No risk, no riches.
Exactly.
However, let's talk about, like she said, a CD account. So I'm going to put you in the mindset of a bank account. Let's take, for example, $50, and you're $50 in a bank account in 6 months. We'll just take that 6 months. Because this is how little that you can use in order to start investing in the stock market. So if you have $50 in 6 months in a bank account, in 6 months, your $50 is either going to be $50 or will be less than $50. Why? Because of the bank fees.
Exactly. It's going to be zero. I'm going to tell you that. It's going to go down to zero because the bank fees are going to eat that up. You got $10 a month for that account. So actually you're going to be negative. You're going to owe the bank after 6 months if you only have $50 sitting in your account. So what would you rather do with that money?
And on a good note, we'll just say you have a bank account that have no fees. It will really be.
Right. It'll just be
$50.
It ain't gonna go grow.
Okay.
It ain't gonna go no further than where it was.
It's not.
So
now, if you took $50 and you invested it properly into the stock market, that $50 can easily be $65 in 6 months. Which is a $15 profit. Now, and the only reason why I say $65 is because the market typically, I'm not going to exaggerate. You're like, oh, you can, grow 200-300% all the time. The market typically grows anywhere between 10 and 30%. Okay, so I went with the mid. So 65.
Right.
You see what I'm saying? So that's $15 more
than you
would have had if you just had $50.
Hello.
Now, just to give you an example, I invested in Moderna 6 months ago in May. Moderna. I did my research. I did my detailed research, which we could talk about in other workshops, and I bought Moderna at $42. $42. Moderna today, when I actually wrote this workshop, I put $159. Moderna today is at $169 per share in 6 months. In 6 months. Okay, 163% return in 6 months.
Now, if you had just set that money in the bank, girl, you might have spent it. It wasn't going to earn you nothing.
$117 profit.
What?
You see what I'm saying? In 6 months. Per share.
Okay.
Per share. Let's be clear.
I ain't
gonna tell you how many shares I got, but that's per share. But per share.
Each.
So, and that's not the only one that I make profit on. Like Tesla, just purchased Tesla less than 2 months ago. I purchased Tesla for $348. Tesla today was at 600 and
it was like 622
620.
or 652.
Yeah.
But you have to be.
And that was
ready.
that was what, September? That was September. That was a couple of months ago. This is only a couple of months ago.
Right.
Have I had stocks that went down? Yes. And that's because sometimes they do, and sometimes that they are. Like, that they're just not going to go do well right now.
Right.
Let's be clear. Amazon is one of the top stocks. It's almost $4,000 a share. Amazon came out the gate and told you they weren't going to make a profit for the first 15 years in business. And they have been one of the top stocks out.
Around.
So sometimes you got to understand the company as well. And that's something that I go over. In another one, our Wish I Knew workshop, our Wish I Knew stock workshop.
I bought a little piece. You know what? I signed up for Robinhood, right? Robinhood, that's a trading platform that doesn't charge you little or nothing. And they give you free stock when you sign up. And the free stock that they gave me was in a solar company. And I was like, you know what? This makes sense. So I bought more shares. When I bought that, it was $4.17. It's like $42 a share now. So, take advantage of that. It's that if I had put that money and just let it sit in the bank, I would have spent it. The bank would have ate it up in fees. It wouldn't have made me any additional money. It would not have created any finance. It would have just been money sitting in the bank.
Absolutely. So do not be afraid to invest. Investing is easy once you get the proper tools in place where you can start doing the proper research that you need to do. Don't be afraid. Don't be scared to start looking. Don't be afraid to start reading books. If you have Robinhood, look around Robinhood. In other workshops, we'll go over more in-depth Robinhood, TD Ameritrade, E-Trade, Cash App, Sink and Swim. It's a few other platforms, and some platforms may work good for you and some others may not. So get your credit together. Definitely got to get your credit together in order to be stable once you start getting all these finances. And there's other ways to make money with that credit as well.
With that credit.
You see what I'm saying? To make that credit. To make that a hustle. You know, you could turn that good credit to a hustle. So if you already have good credit, tap into a workshop that's going to teach you how to take that already good credit
and
turn it into a
something
hustle.
else.
So
Finance.
this is about creating passive income. It's nothing like creating passive income and purchasing back your 24 hours. So if you could create finance, you can start purchasing back your 24 hours. You got to start developing your finances. Your finances, not someone else's. Don't forget to pay yourself 10% first. And start saving so that you can start investing in some of these
so
things.
that you will have money to put into something that can create more money. Stop spending it all. You don't need that. Put it up. Put it to the side. You need to create this so that you can get involved in this game. I mean, if you can't pay, you can't play. Put that up to the side so you can get involved. That's all. Road to riches, man.
The road to riches. So if you guys like anything you said, please leave a comment, and if you want to move further in anything that we discussed today, please go to our website, check out some of our courses that we have, Introduction to Stock, the Stock Level Up, the credit courses that we have up there. Make sure y'all check those out. Make sure you tap in and make sure you invest in you.
Okay.
That's the first investment that you first want to make before stock, before a company, before anything. Invest in you.
Ebonic Economics. Money talked in our language.
Appreciate you for tuning in.
And we're so glad you signed up for this workshop. We certainly hope that you learned something.
Absolutely.
We are here for you. Ask us anything in the comments. We will answer. Goodbye.